Something to note as well, we also launched our Jikuze app. You can track our performance there on all our portfolios. We've been seeing great traction, great build-up in activity there, onboarding new clients, and we're glad to see clients reciprocating the work we've been doing and the amount of effort we have put into building this app. What to expect in 2020, I've explained about 2019, and 2020 we are looking at a number of risk factors. We expect that there'll be short-term shocks in the market, and this will present very, very attractive entry points for market participants. We'll explain how to take advantage of this. What we are looking at, as I mentioned, is very short-term scenarios which will present very attractive opportunities for investors to come in at very, very attractive opportunities, rather than investing at what might be perceived to be elevated levels. Look at the country. If you compare Kenya with sub-Saharan Africa, with something which is very important for foreign investors, control a large portion of our market. Our currency is quite stable. In fact, if you look at the standard deviation on our currency, it's the lowest in sub-Saharan Africa.
We are looking at a real GDP estimate of 5.7%, and this is driven majorly by the base effect. Our estimate for last year is around 5.6%, and we are seeing the growth will be more of a base effect. And in addition to that, services sector, as you can see from the graph on the left, the gray tab across the years, you've seen that that's the component, the growth rate of the services segment, which has been quite robust even in 2019, and we still expect it to continue the same.
We're expecting increased foreign flows during the year, which will spur the equities market and increase confidence as well. We've seen the introduction of the derivatives market, new instruments for investors to look at, new positions for investors to take. In terms of the sectors, we're looking at the financial. We split them into financials and non-financials. On the financials end, we believe insurance companies, particularly Kenya Re, in our assessment, still remains heavily discounted and undervalued, presents more value despite the regulations which are expected to come up. There's been overreaction in the market to that extent.
We are looking at the range of between 100 to 104 against the dollar. Main reason is the currency is, even the IMF classifies it as a managed currency. So I look at it on the flows on it in terms of the biggest determinant in terms of from an outsider perspective is basically on the external debt obligations. And roughly our workings for the course of 2020, we are looking at external debt obligations of between 310 billion shillings vis-a-vis forex reserves of around 880 billion shillings. So on that account, we see that yes, there's much more reserve adequacy to meet the external debt obligations.